Mic check. Mic is on. Levels look okay. I'll talk directly into the mic a little bit. Looks like. All right. I think we are ready to roll. Good evening, everyone. I hope everyone's been doing well. It's been a minute, but good to see you all. If you're watching this later, I appreciate you hopping on. Had some really nice things that happen, especially since the year's coming to an end. I'm going to have some time to actually live stream again, and it's been so impossible to stream and trade in the morning, get ready for work, actually go do work the whole day. It's impossible. It's a very, very difficult, not impossible, it's a very, very difficult task. But we're going to do it anyways. We're going to still do our preparation. We're still going to look at our model and prepare for the time when we can trade. So without further ado, I think we're going to go ahead and begin. So let me pull up, what screen is this using? Sorry, for some reason, it's not registering the correct screen, so I'm going to have to put some of this stuff over. That's fine. Let's go over the big screen anyways. All right. So first things first, we're going to have to use this screen over here. So I'm going to pull this over here, and then also pull this over here. All right, so this week we have a lot on our schedule. Every single day at specific times, there is some kind of calendar event, and that's going to be your impetus to look for volatility in the market, or when moves potentially could occur. So, or setups could occur, right? So, following the really big ones, FOMC, I feel like trading post FOMC is going to be a little bit easier. But the Fed's supposed to cut rates by 25%, but how can they do that with inflation not really going down to its targets, right? So they have to balance unemployment going up with inflation also not going down. So you might have this weird situation. They call it stagflation. Definitely worthwhile looking at that concept in economics, but basically you have prices are still rising, but wages aren't effectively. So it's going to be an interesting situation. More important for you to learn how to trade and learn to stick with your model specifically. That's what I've been doing, and it's been becoming a lot more consistent. But lots and lots and lots of back testing. I'm still studying every day. So this week the big one's Wednesday, but look for those red folders at specific times of day, and you should be able to handle most of these. You'll still look for your silver bullets at key times. Depending on what model you trade, you might be trading 2022, maybe you're trading something completely else. But at the very least, pay attention to these, and these will be very important throughout the day. Okay, so without further ado, let's look at the chart. So we're going to pull up, we're going to start with the weekly chart, okay? Let's get rid of some of these. So this is the weekly chart over here. Past 3 weeks, every single candle, you can kind of see we rusted way, way, way above those all-time highs. And what did we leave? We left a couple of fair value gap all the way down here near 350. I think that with this much movement, the key thing here is, have we come back down to target the previous time when people had sold off? Not yet. We got close, but we didn't quite. You could take a look at these. We got close, but we did not quite get there, right? So there's still some liquidity down here to be taken, and people trying to get out of their shorts to be taken too. So that being said, I am anticipating that we're going to be having just a little bit of uncertainty this beginning part of the week before FOMC. I think that we're going to trade to and through this midweek opening gap in between these two midweek opening gaps. I think that coming all the way down here is possible with FOMC, and that would get a lot of people going shorts. They're thinking that it's the top. But at this point in December, we're waiting for Santa Claus rally type material. We are continuing to make new highs. Shorts keep on getting squeezed. So early shorts, not going to have a fun time. So what we do from there is, do we expect price to go down? And what can we look at, right? So this delivery, meaning it's sold off and then we bought back up. So midway through this could be a target. So 21,500. This new week opening gap and the distance between these two, I think we're probably going to revisit some of these two. So watch the 21,650 level. Watch the 750 to 650 level. I think there's going to be a nice little range down there to look at, as well as being the high of this week's candle as well. The lowest I think will probably end up going would be down into this wick and then potentially into this fair value gap. So what do I see here, right? This fair value gap that I have highlighted, it's within this same bullish order block. And this is actually a propulsion block, but now it's taking the high off completely. So it's hard to say now because we're in such a big premium. But I am looking for this to be a draw. Maybe not this week, but FOMC seems like the perfect thing to do it on. So I'm watching that closely. In the first half of the week, we want things to go down if you want them to go back up further. So generally, you can see last week the perfect example of this power of three, right? So you open here, you traded lower throughout the week and higher and lower, but you traded lower, and then towards the end of the week, it expanded higher, and then sold off towards the end of the week, right? So that's a power of three. There will always be some key direction. There are some weeks that are less direction than most, but generally you can see that majority of these weeks had some sort of key direction. What direction do we anticipate? I am thinking that although we're still on a bullish trend, I can't imagine that we completely blast off, but I suppose that is possible. So let's take a look at, so this is NASDAQ, and this is on exchange, extended trading hours right now. So we see that we've opened a new week. Actually, this is our new week opening gap from here to here. Okay, this black line here. So actually, so you can kind of see this range here. We anticipate this range. I would extend that throughout the whole week. It's going to refer to this range plenty of times. And I don't prefer to be trading Asia anymore. I just can't. I have to look back at that. I thought I could do it, but it does not. It's more fickle than I thought it would be, and you don't see the setups nearly as often in my mind. So I can't trade Asia. That doesn't mean you can't trade Asia. That just means that I can't trade Asia as much. I have to either wake up to trade London, or I have to somehow do a scalp in the middle of the day, which is impossible if I have back-to-back meetings from Zoom, right? So you're working 9 to 5 as well. It's tough. I mean, especially if you go in the office, right? So you have to learn how to take scalps and how to take money out of the market very quickly during the break times, if it lines up with one of your sessions, whether it's 9:30 a.m. that you trade, 10 o'clock a.m. that you trade, 8:30, 7 o'clock that you trade, whatever it is, you have to be really, 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 really strict with when you trade and what you look for. So that's what I've done, and I've been far more consistent once I actually did that. So where can we go next? So we have the weekly draw is down towards this new week opening gap and potentially halfway on this wick, so that 21,500 level. Let's see how we behave, because if we trade down to this level and just completely rocket upwards, this could be treated as a breakaway gap on a weekly level. So, I mean, that means there's a lot more higher that we could go, right? So, let's go down to the daily chart, and let me maximize this so that you can see a little bit more. So, what we see here are the previous 3 months worth of price action. So with the 20, 40, and 60 days range, we see that we're in premium of the 60-day, premium of the 40-day, and a premium of the 20-day, and that's a continuously moving target, right? We check every single day. We're looking to see what range are we in to determine discount or premium, right? So we're always in a premium at this point. So generally speaking, if we weren't making all-time highs, I would say, hey, maybe it's time to look for shorts. But since we are looking for all-time highs, we do not want to try to be picking a top. Generally, and that's what Michael says. We don't want to pick a top. I actually learned something really interesting that I'm going to show you guys. I actually pinged Michael about this earlier today, but it's something that is really, really interesting, especially if you've been studying ICT. So hang tight for that. We'll go over that in a moment. So on the daily chart, you can kind of see, let's see if I can make this a little bit bigger. So you can kind of see for the past few days, we traded down to down close candles and we've broken up off of them. So we've held those bullish PD arrays. So when we take a look at this, you can see that the high here was 21908, right? That's somewhere around here. So this high, as well as this midpoint, could be potential targets for the upside. We've already traded into this bullish order block high, so we don't, if we're really bullish, we don't want to see it go too much lower than this. Now, could it target this here? Sure, but it's already traded down here, right? So if it's very bullish, it may not give us more than this little smidgen for the entirety of the week and then continue higher. So I'm watching that closely. Overall, still bullish. Overall, still looking for longs overall. So what you want to do, if your bias is long, then you're generally looking for situations where on the 15-minute liquidity has been swept and you're looking for a reversal option. So a technique of a reversal pattern to come up, whether it's a bullish breaker to form, or after taking a key level, or if it's a reversal, like an immediate rebalance. There's a lot of ways that you can enter, but identifying what your narrative is for the week is kind of important. So if we're looking at this weekly chart, and we think that we could trade lower here, well, we're looking at this as an open, and anything above here would be key for shorts. Now, do I think we're short forever? Probably not. Maybe we are gonna go up a little bit first day. Maybe we go down Tuesday, and then we come back to new week opening gap for Wednesday until FOMC happens, and then we get a big expansion or a big drop, right? So that's in my mind, that kind of schedule that I'm thinking about is, okay, well, every single day, where's the new week opening gap? This specific week only, right? Because it's FOMC in the middle of the week, I'm expecting price, whichever direction it goes, whether it's lower first or higher first, I'm expecting it to come back to the new week opening gap. And the reason why is that's equilibrium for the week, that's the starting point for the week. We're above the new week opening gap. There's no other new week opening gaps above us, but there's one below us. So if we trade to the midpoint, so somewhere around 21,700, if we start to close below that, then we're likely going to target this old new week opening gap. So 21,650 is going to be my first target if we trade and close below 21,700. So keep those levels marked down and jotted down on your charts because it's going to be important for you to keep an eye on those, okay? So, okay, great. So, next. So this is on the daily chart. If we're going to see continuation higher, we would expect the first half of the week to either go lower or consolidate so that we can have an accumulation, maybe a manipulation on Wednesday for FOMC lower before we trade higher for the rest of the day. And then Thursday, we still have a couple items on Thursday, right? We've got unemployment claims at 8:30 in the morning on Thursday, and then core PCE at 8:30 a.m. on Friday. So you're going to want to keep all those times in mind so that you will know exactly when to look for volatility to take a key piece of liquidity out. Okay, so I'm thinking either consolidate or head higher or lower first month, like Monday, Tuesday of the week, and then back to equilibrium for Wednesday. Let's see how close I get, but that's what I'm hoping to see is any liquidity that's formed the first half of the week I expect a sharp move in the opposite direction first on Tuesday, and then back up to target those areas of liquidity towards the end, or towards the middle. Okay, so let me take a look. I think that's from a daily chart. That's what I'm looking at. Or from a weekly chart, that's what I'm looking at. On the daily, that will likely mean, okay, well, what do we aim for? Does this down close candle support price action higher? If it does, we don't want to see it close below the mean threshold of that. So if we take a look at the midpoint of this here, 50% here is 21,686. So if you start to see price trade upwards and then start to close on a daily level below this level, that's, I mean, look at that. We're already well below 50% from this new week opening gap to this new week opening gap. So if you're trading and you close below this, you better believe that we will be targeting this new week opening gap. And there's actually a little bit of a space between these two as well. So that's my target for the first half of the week. If we are bullish, then I imagine that we would have, and let me go back to the weekly chart for this. I would imagine, and let's do, so either way, we expect to go lower than higher, and that's if we're still overall. So that's what I'm expecting from a NASDAQ perspective. Okay, so let me know if there's any questions in the chat or in the comments afterwards. I'll get back to you as quickly as I can. And let's see, let me do a quick check for any comments in the chat. No comments in the chat. Okay, great. All right, so something that I want to show you for those that have made it this far. So something that I found relatively recently is so there's every single day, there's something called the first presentation gap. So it's the very first gap that forms, and I'm going to go to real-time hours to illustrate what this looks like. It's a little bit easier on this one. All right, so this is a real-time hour chart. You can see Monday, Tuesday, Wednesday, Thursday, and then Friday as well. So we're going to look at day by day how different charts look and how first presentation gaps look within those days. So this is on Friday's chart, right? So you can kind of see that here. Make sure that it's on my screen. Great. I'm going to maximize this chart here. So this is. Oh, JP, what's up, man? Hey, dude. Good to see you, brother. How have you been? Sorry, I was supposed to call you. I will jot this down on a piece of paper. So things have been kind of nuts with I have like a lot of production releases, but I'm gonna jot down Paul JP on the weekend. I haven't forgot this time. I'm gonna make sure I have it on me. So good to see you, brother. I hope you've been doing well. Okay, so what was the thing that I wanted to show you? So something that I saw and found over backtesting. So there's this concept of the first presentation gap, right? It's this first gap that we see highlighted here. So at 9:30 in the morning, the very first fair value gap that you see, it's important for you to highlight this. So each day, if you see a fair value gap, run this through the rest of the day and potentially the rest of the week. It's very important. It's going to be referred to multiple times sometimes, right? So on Friday, you can kind of see how when we traded up through that, we made a high, and then we ended up coming back down to that fair value gap, and we traded up a little bit, but we took out this high, but we're unable to take this high up. And then what happened? We traded back to it, and then eventually below it as well. So what does price do at that point? It trades back up into that first presentation gap. So if you are looking at, let me see if I can make this bigger. There's definitely no, I can keep it so that as if we're seeing candle by candle, okay? So this is what you're seeing on a 1 minute chart, right? You see that it comes back up into that 1 minute, that first presentation gap, and we see it trade lower. We see it trade back up into it. So if you went short at 819, you would have had to deal with about 7 handles of drawdown there, maybe about 11 handles of drawdown, and then it starts to sell off. And then does it return back to it? No, right? And then it just keeps on going. So this first presentation fair value gap is already a really powerful tool. And you can kind of see what happened for the rest of the day. We traded down, created a whole bunch of relative equal lows, and then traded back up to the first presented fair value gap at the end of the day, right? And then we sold off there. So the concept that I pinged Michael on, this first presentation gap, it's good. It's a lot of people aren't using it still. But what I found, which was also even better of a confluence, was having the first 2 presentation gaps on the chart. So if I take a look at this, what's the second fair value gap which forms? This is the second presentation gap. So this is the first one here. This is the second one here. Look at how price reacts at that second one now. We do blast through it at first. So remember, this is like minute by minute. We see it blast down. It holds at the first presentation gap and reverses. Now we trade up, but we trade up past this bearish order block into this bearish order block as well, and we sell off from there, right? So what happens here? We trade back down through that second presentation gap. We trade ping pong between the two. So you kind of see how you're now trading up into there. And if you were taking, you saw that these bodies were going lower and lower and lower. So market structure has shifted the state of delivery. Then you can now take a look at confluences here. So we saw a sell side imbalance here, combined with this second presentation gap. And we had a huge real-time hour gap beneath us, right? So those are all draws on liquidity at 10 in the morning. So oftentimes you're looking for liquidity there, right? So what happens? Well, you see it ping pong through this second presentation gap, where you see it close within there. So you can take a position starting from that second presentation gap, aiming for past the first presentation gap, and then aiming for that real-time hour. So let's say that you targeted 838 as your short, and you got in after it bounced here, you got in either this candle. So 838 would be your short. You would have 46, so that'd be about 8 candles of drawdown, not much. Your stop probably would have been up here if you can stomach it, but at the high of the fair value gap candle. But you see it trades lower from here. And then you can still enter from your fair value gap. Even if you missed this second presentation gap, you can go back to our original short idea from the first presentation gap. Now that you can kind of see it's a balanced price range, it's traded up, it's traded down, and now this is a balanced price range. We want to see it immediately rebalance away from that, right? And we do. We see that exactly. So you could have improved your short back from 838 instead of 819, and you would have had less than 10 points of drawdown. Saeed Pegmoudi, hello, good to see you, brother. How are you doing? Hope you're doing well. Okay, so now this second presentation gap, you won't trust it until you look back a few days in order to do that, right? So I want to show you, once we leave that second presentation gap, though, we keep on going until we fill in the majority of this real-time hour gap. So this real-time hour chart, if you just focused on trading the real-time hour chart when 9:30 a.m. opens, and you have a giant gap like this, chances are you're going to target it. Not always, but it's a high likelihood that you will. You have to be willing to adjust, though. Sometimes it doesn't. But today's call, in addition to weekly, I want to focus on the second presentation gap because it's really interesting. Let's go to a different day. Okay, so let's go to Thursday, right? So Thursday, you see that we started with a giant gap above us, right? And eventually we see that we traded into that gap, and we traded into, let me do this real quick. So we trade into that gap. Mark that here for y'all. That 50% mark is around here, so we're trading the 50% portion of it before we kind of squiggle around the rest of the day. We do fill up almost majority of that gap before we traded lower. But this day was very hard. I remember this day very vividly. But let's take a look at first and second presentation gaps, right? So the first one that you find is this little one right at the 931 candle, 932, and 933 candle. So there's this fair value gap here. So here and here. Now, watch closely. Where's the second presentation gap, right? There's no gaps anywhere around here. Everything is flush, exact levels until you get to here, right? So that's the second presentation gap. Watch what happens. So we see that when we are traveling lower, it's like price scale. So you can kind of see during the day we've kind of consolidated until 10 o'clock. We had a Judas swing at 10 o'clock, and then we started trading higher. But what specifically, right? So in this chart, taller so you can see these. So in this chart, we traded up to that first presentation gap and we blew through it completely. So now, what are possible areas for retracement? We can see this as a possible retracement to the first presentation gap, or maybe it's the second presentation gap, right? Look at how specific this is. Look at exactly how close this thing. It's perfectly hitting this second presentation gap. Okay. So your longs could have allowed you to get in on the second presentation gap there. And if you did, you could target a couple of things. The first target from this level of 21,675, you could have taken this to 695. 20 points, all these relative equal highs, very easy target to take profit. The next target that you could target would be the 25% of this. So 706, another 10 points, or 726, meaning the 50% of this real-time hour gap. So all of these would be reasonable based on Caleb's model, right? So trading up to this would be 726, 725. And if you're entering when it retraces back to that second presentation gap, 675, you're effectively getting 50 points right there. So, and that's all you would need. It would be a difficult hold because you almost got there, sold off, fair value gap, fills it in, comes in, hits it again, and then finishes it off. Right? So, would you want to have held for more? Maybe, but that would have been enough. 50 points in one day, that's incredible, right? But we can kind of see if we see the rest of the day, remember, this is the second presentation gap, right? Notice where it drops down to. So remember, it's selling off, and you see it drop down all of a sudden very quickly to that same level, that second presentation gap. And these are also there too, so you know this is a balanced price range. It's trading lower, it's trading higher. So it's in a balanced price range right now. It trades above, off of that, a little higher, comes back down to it at 12 o'clock, takes out these AM stops, and then goes down to what? Look at this exact price. First presentation gap goes exactly down to the tick of the first presentation gap. Absolutely nuts. And then you see it start to trade away during the 12 o'clock macro. And if you were still trading today, kudos, that was a hard day to trade. I remember that day very vividly, very difficult to trade. I did not want to take any trades in the afternoon, but you can kind of see it ended up after taking out sell side relative equal lows here, and also taking these lows out barely. It went and targeted the single buy side liquidity up here, and then it sold off again. So very difficult day to trade, it actually sold all the way down it took this liquidity out, I think, after hours, and I think there was some earnings as well. So um, this is just one day, Thursday. So this is the second presentation gap on Thursday that I was pointing out on the real-time hour chart again, right? So now there's also, we're going to look at another one, right? Let's look at Wednesdays, right? This is one which it just ran away. So some days it does not come back to this fair value gap. You can kind of see how like it's not come back to this at all yet. Sorry, Paul. Sorry, give me a second here. Let me finish up. Okay, so let's take a look at Wednesday. Wednesday is an example where it just ran completely away, right? So first, this is where you don't see it do any more than barely dip into here and just keep running. It's an expansion day, so you're not expecting things to go very smoothly back into this real-time hour gap because you have a lot of shorts that are trapped there. So you can kind of see this is the first presentation gap, and then you see one more up here temporarily, right here. So you can kind of see how this does line up with these coming back to after the shift in state of delivery has proven that we're still going bullish. You can treat this as effectively a balanced price range. It does color outside of that a little bit, but not by much. Even if you took a long here at 610, you would have only had about 6 handles of drawdown, and you would have had a phenomenal run that day. Absolute tear on the day. If you look at it, the ETH extended hours, you're going to find a lot more other targets to target. But from a real-time hour perspective, Wednesday was the day that it just completely ran away from us. So not going to see as much action on some days, right? But then let's look at Tuesday. So if we look at Tuesday, Tuesday's first presentation gap was here. That was the very first one that formed. The second one was here, right above it, right? So look at what happens when we look at the rest of the day, okay? So 9:30 a.m. opens, you're watching, you're waiting for the first hour, half hour to close, and you're looking for a play. Maybe it's the play here where you try and scalp that up, but typically you see relative equal highs. I would be looking for price to take that, form a reversal pattern, like this bearish breaker here. So this is a bearish breaker, right? So I'd like to see it form a reversal pattern, trade lower, and then now, what is it trading to? If you didn't take this breaker, you've got the second presentation gap here. Now, what happens? Let's say you missed the breaker there, and it trades down to the first presentation gap. You could now set a limit order to shorts this first presentation gap, or we can have it come back to, and see if it comes back to this second presentation gap, because there's a bearish order block here in confluence, right? So let's say that you set a short at 568. What's your max drawdown here? So it goes back up to the breaker one time. So 68 to 78. So about 10 handles, 9 handles, right? Which is where your stop should be. Probably about 12 handles for NASDAQ. But all this accumulation here, it stops dead in its tracks in this second presentation gap. So having both on your chart is a really, really nice confluence that I've found over backtesting shows up more often than not as a confluence that will help you be able to better play the morning session. And what happens after? See that, right? We take these relative equal lows, we go into fill in the rest of this fair value gap there too. So, I mean, if you were taking a short there, that's effectively about 100 points within how much time? 30 minutes? So that could have been your day. Completely right there. That could have been your day. Be done, over with. So that's all I have time for today, unfortunately, but I hope this was illuminating to you. I would highly recommend you go back and check what that looks like. But yeah, I hope this has been illuminating for you, and that's going to be it for today. So you saw my, if you missed my weekly prep, go back and watch that. I'm looking for price to head lower first. But yeah, I think that's going to be it for today, folks. Thank you very much. Appreciate you listening in, and I hope to come live later this week. Probably shouldn't come live all the time, but you know what? I'll still do it anyways. So thank you very much, everybody. I hope you have a safe trading week. Happy holidays, everyone. And yeah, fly safe if you're traveling. But we're gonna get this bread. So have a great day and evening, everybody. Good luck trading this week. Watch out for headphones. Take care, everyone. See ya.